Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. I welcome all of you to my today's session of automated trading, which is the third part of the ongoing series involving the linear regression intercept and the simple moving average. We have done the basic framework in past two trading sessions, and now we will be moving on to add the buy side, and let's get started for the work. This is a brief technical description for the linear regression intercept, the SMA, min-max and the ATR. Before we get started, here is the standard disclaimer. I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing and also run it on the demo account for good enough time. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we move on to the chart. Today we are working on the buy side. So basically we will see the framework where the buy trade might be executed. So we want the buy trade to happen above this SMA line, and as you can see here, starting from 13 GMT onwards, we have the price action above this 100 SMA, but we are not really getting involved in the trade after it has crossed above and is sustaining above the linear regression intercept. So apart from this requirement, we also want just during the last hour it should have crossed above the linear regression intercept from below it, and at the same time its last 3 hours low should have been below the linear regression intercept as well as the simple moving average. So as you can see here, not all the conditions are going to be fulfilled, so we are not really going to get a trade there. So now let us see where we might get trade, as I will be able to explain to you what our setup is trying to achieve. So here you can see this is also a place where we have the last hour's candle close above the 100 SMA, and also during this 7 GMT hour we have the close above the linear regression intercept, whereas the prior hour was below the linear regression intercept, as well as the last 3 hours low is below the SMA as well. So here we will have the order coming into play after this close of candle above linear regression intercept, and then we have to see if there is good enough volatility, and for that we will be measuring the difference between this last 3 hours maxima and the minima, and then we will be comparing that maximum minima value to the level which we have defined using the daily ATR, and we have set the limit at 40% of the daily ATR. So at least that volatility, that movement should be there. That means that we want to get involved on the buy side only when the buy momentum is strong enough and there is good enough volatility. For that we have placed the condition as well. And here, as you can notice, there is not much of a movement here. We have difference of around 15 to 16 pips, and I'm not really sure if it is going to be more than 40% of the daily ATR, and because of that we will have to rely on the algorithm here. Each time doing the calculations manually and keeping a watch is not really feasible, and that's why we mostly prefer to rely on the algorithmic setup to do the job for us and in an efficient manner. Now moving on to the Visual J Forex platform developed by Ducoscopy Bank SA. We have this platform, and now we have already done this work here. We have done the instrument subscription. The instrument has been kept as a USD JPY, then the position amount has been defined at 0. We have also brought in the linear regression intercept hourly blocks for the standard time of 14 hours, We have also got in the SMA, the 100 line on the hourly time frame. We have these min-max indicators for defining the minima and the maxima and the difference between the two values. Then we have got these historical candle data to look at the price action. And then we have done a lot of calculations here. This is for the order validity. Order validity is going to be for 3 hours. This is the sell entry point, this is the buy entry point, and these are going to be above and below depending on which side of the trade you are looking at. For a buy trade, we will have to deduct the 20% of the daily ATR from the last tick price, whereas for the sell trade, we will be adding the 20% of the ATR here. Now, moving on to the further calculations, here we have defined this minimum and maximum differential, this calculation, and then we will be comparing it to the minimum ATR difference. Here I would show to you what is the value. It is 40% of the ATR, and we also have one condition in place where we require last 10 means prior 10 hours levels to be taken into account, and the 10 hours back the hourly candle should have closed. Here I would explain with the help of chart. Last 10 hours actually should have remained below this linear regression intercept, and we are not looking at the each hours close. We just want to make sure the 10 hours back the levels were below the linear regression intercept. So we will go back in time and we compare the linear regression intercept level as well as the candle closing level in that point in time. So that is the condition, and then this 1 minute blocks for defining the exact entry point, and it will be when the price action crosses above the last hour's candle close. That's when the trade should be initiated. Now what we will need to do in today's setup is that we will start working on the buy side, and for that we are going to need multiple action block first. So for that we will have to go into the logical part, and we will also need to do the calculations for the stop loss and the target price, which we will do later on. So for the time being we can leave some space for the addition of blocks in case the need arises. Now coming to this buy side build, we first want to make sure that 10 hours back the hourly close was below the linear regression intercept. So here as you can notice that the chances are higher if we have already seen good enough consolidation on the lower side, and then eventually after due consolidation the momentum is picking up. That improves the chances of being in profit, and that's why we are doing this. So we compare the linear regression intercept level 10 hours back to the hourly close 10 hours back, and for that we have to take into account the candle 23's closing level, and candle 23's closing level will need to be compared. Here is the candle close, and we will compare it to the linear regression intercept value 10 hours back. So we have to take into account so here this is our first condition. Shift is 10 and time period is 1 hour. So we have got it in place. And this close should have been below the line 17. Now after that we want to make sure that the last hour's candle close is above the SMA 100, and for that we will need to take the candle 22's closing level and compare it to 100 SMA candle 22 closing level. Okay, and then we compare it to SMA, and SMA is here. Okay, so here we have defined this condition which entails that last hour's close should have been above the SMA 100. Okay, it should have been above. Now we also want last 3 hours candle low. The minimum value of last 3 hours should have been below the SMA 100, and for that we will have to rely on the bid side low price. This is it, and we have to take this minima 17 and minima 17 needs to be compared to the SMA 100, which is line 18. So here we are doing this comparison, and now we need to bring in additional if blocks. Minimum 19 should be less than line 18. Okay, so let us take these blocks and arrange them well. So here we are bringing in the buy side blocks. Pardon me. So here we have done these three conditions in which we have done the comparison of last 3 hours minimum value with the SMA, and then the last hour's candle close value with the SMA 100, and also we have already done the comparison 10 hours back of that hour's candle close with the linear regression intercept value 10 hours back. So we are done with that. Now moving on, we want the let me first see what will be our next step. Now on the chart we want the buy trade to happen, and it should only happen when there has been good enough consolidation. And now moving on to this volatility, we also want the difference between the minima and maxima should be good enough. So we are doing comparison here, and for that we will need the a block with two competitive values. Those values which we have already done, we have calculated them. So here is minimum ATR difference, and here is actual ATR difference, and the actual ATR difference should be higher than minimum ATR difference, and that is done. Now we again go back this should be first input greater than second input. So we have defined the volatility as well, the required volatility, the prerequisite. Minima condition done, the difference between minima and maxima done, last hour's candle close done, and the comparison 10 hours back as well. Now we have to compare the last hour's candle close with the linear regression intercept value, and for that and here we have got this candle 22, and also we will need to add one more historical candle block here, as we have not really added the block with shift to value, as we will need to make sure that the crossover is happening with the candle close above in last hour, and for that we have to do the comparison with the closing level last hour and the hour back, hour prior to the last hour's candle close. So for that matter we have to get one get historical candle. So here it is. Default instrument. And shift is going to be to and here we will add this in between these two blocks so that it will become easier for us to disconnect and reconnect. So here we have to now compare these values, the closing levels of candle 22 as well as candle 42 with the linear regression intercept level for last 1 hour. So we have to take into account the candle 22's closing level, and it should have happened above the linear regression intercept level for last 1 hour. And for that, to make sure we are right, we have to get in so here we have candle 22's closing level, and we will compare it to the linear regression intercept value 1 hour back, and here it is. We now need one more a block so here it is. Candle 22's closing level needs to be above the linear regression intercept level 1 hour back, but prior to that we want the candle close to have happened below the linear regression intercept levels, and that should be 2 hours back. So again we will need to bring in one more linear regression intercept level. So here we got this linear regression intercept, and we defined at 1 hour. And this should be 1 hour. This algorithm which we are developing is basically based on 1 hour, so I am getting most of the default time period defined at 1 hour. If you want to change it, you can always change it. There is no compulsion to stick with this particular configuration only. And here we want the line 44, that is the linear regression intercept levels 2 hours back, to have been above the hourly close level of candle. So here we go and we take these essential blocks for comparison and we want candle 42's closing level to be taken into account. So here is candle 42 and here it's closing level, and it should have closed below the line 44. So again here we have to take the logical part, and it is going to be if so here it should have closed below now. Candle 42 is closing level and the line 44 is comparison done. We have defined this to help us pinpoint when the crossover happens, and now we have to go back to the chart again to see if we are taking into account all the minute requirements. And so here we have defined these conditions. So we have done this basic requirement that last hour's candle close should have happened above SMA, as well as the linear regression intercept 3 hours of minimum level should have been below the linear regression intercept, and also the volatility should be more than 40% of the ATR range. Now we have to simply pinpoint the exact entry here, and that is going to be done with the help of two more if blocks. And we will be comparing the candle 31s and candle 32s closing levels to the closing levels of last 1 hour candle. And here is candle 31, we take into account its closing level, and this has shift 1, candle 31 is shift 1, candle 32 is off shift 2. And we turn our attention to the last hour's candle close. And this is candle 22, look back period is 1. So here we have to take candle 22's closing levels, and this conveys the requirement that the price action should start to rise above the last hour's candle close, and only then the new order will come into place. So here we have to disconnect this and take this where it all belongs. So here candle closer have been taken into account. The candle 31 is the younger one, candle 32 is the prior one. So here the prior hour's closing level should have been below the candle 22's closing level. So what we have to do now is take into account the candle 42's closing level and comparison with line 44, and as I said, it should have 10 hours back, it should have closed below the linear regression intercept level at that point in pardon me, sorry, at that point in time. And here we want these to have been below, and then it will be above. That means the price action is crossing above the last hour's candle close, and rest of the conditions are in place. So here, as much as we needed, most of the conditions have been defined. Let us make sure we haven't really missed out on anything, and I think we haven't. So that looks good to me. If we spot anything, we have one more session left, so we will do the change there. Now what we have to do is bring in the position open, the pending open order, and for that we have to take this, and here it will be buy limit, and this is going to happen when we have the candle 31 going above the candle 22's closing level. So here we have to now fill in the buy price, and the buy price is going to be 20% of the ATR below the last tick price, and that is BEP. Slippage 2 pips is good enough. Default trade amount will be 0.1 million, and good till time, the order validity, which we have calculated already. Oops. Now we have to do the calculation for stop loss and the target price. But as we are past 30 minutes, our session is getting extended. So here I would need to wrap up the session and say goodbye. But on Monday we will define this stop loss and the target price. We can go with a fixed price as well. We will if need arises. We can also use the fixed setup like say 10 pips, 20 pips, or whatever you feel are good enough. And target price, as you are kind of aware, in most of the sessions I have done this conservative estimate of keeping the stop loss almost half of the target price. So you can adopt a similar strategy here. In that case, you have to just fill in the this blank, but we are not doing that. We will actually define these variables and we will do it after due calculation. So here we sign off for the day, but in tomorrow's session we will do these calculations, fill in these places, and also work on the sale side to define the conditions for the trade just prior to the execution. So that's it from my side. I thank you all for joining in. Have a fabulous weekend ahead. See you on Monday. Goodbye.